after. Yeah.
So, guys, we're live. Another show, Rolland Market Mashup. For those of you who are just tuning in for the first time or who've been watching us, go to our YouTube, subscribe. We're going to start doing more things on YouTube and probably less on Facebook. But as you can see, Bob is not here today. I think he's not going to be here on Friday as well. But we have a fill-in guest who's my childhood best friend, Dan Vazquez. And when we started doing this, he was one of the first ones to tune in. And it came as no surprise that I found out that you were someone who was in the stock market. That made a lot of sense to me when I found that out. And yeah, we've been talking almost every day just about different stocks, different moves, what we've been doing. And one of the things that I admire about Vaz's strategy, and I'll turn it over to you to ask you a little bit about it, is it seems like you have a good combination of stocks that are steady big names, that are safe names, for example, like a Disney or a Netflix, but then you're really good at finding out about some of these new stocks that seem to be the high volume ones that pop out of nowhere. And I guess my question for you right off the bat is, how do you go about finding your new names? Obviously, I get how you find the names like Disney and stuff like that, but when you see that these stocks are up big and that they have a lot of volume or they're down big and you bring them to my attention, where are you getting those from? What sites do you use? What's your strategy?
Yeah, great question. I think, and thanks for introducing me. I think at the end of the day, like what I've been doing that's like been working pretty well is, like you said, like sticking in those stocks like Disney long term, Starbucks, Facebook, Netflix's, Amazon's, etc. But the way I've been finding these other stocks is kind of just Googling what I would think personally would be working now, like in this time and epidemic, right? Like when I look into there's no concerts, what can replace concerts while there's no live concerts, right? When I think about, hey, sports aren't live now, what are people paying for currently that they're not watching sports, right? Video games, things like that. So thinking the opposite of the trends. And then some of these stocks that are completely booming, trying to think the different aspect of their business strategy. So I was reading something interesting this morning about Lysol, and you think about the ability to just be a product that you have in homes. But when I was digging into it, I'm like, hey, listen, like we're in coronavirus right now, right? Like COVID, and being able to have Lysol in homes, that stock is like jumped huge. But I don't know if you guys take a look, they're actually kind of like pivoting their entire strategy right now. Reckitt Benckiser, RBGLY. They're actually going into the consulting business. And it sounded a little confusing.
Wait, do you have a ticker that we could bring up?
Yeah, RBGLY.
This is an interesting chart.
RBGRY?
LY. Wow. Vaz, I'm loving this chart.
Yeah, so what they're doing right now is they're becoming a hygiene consulting company for all the hotels and travel industry for when they reopen. And they're pitching it as if they have the upper hand on all the technology and all the testing they've done over the years. And Lysol could actually, completely change the game. So they already partnered with Hilton. They're leaving a sticker on your bed that shows that the room was clean according to Lysol standards. And they're also looking to work with Delta right now. And then they're trying to line up a bunch more. So they're getting all these major names that are in the travel industry and basically using their Lysol products to like disinfect and have a security grade standard that they disinfected it correctly.
So the Vaz, they're basically, correct me if I'm wrong here, but they are the go-to, almost like the consultant for companies when it comes to keeping sanitized and making sure they're blanketed with sanitation and et cetera.
That's what they're trying to do. Yeah. So like
That's
their major industry, if you look at like their line of products, like they have pretty much 50% of the products you have inside your cabinets, right? Like Lysol is one of them, but they have tons of those products. And I think for the value of the stock, if you think about it, percentage wise to the original value of it, it's jumped like 25%, right? But long term, from a $16 stock pre-corona to 20 now, I think that this could get to the 30s and 40s if they pull it off pretty well with this strategy they're doing of changing. They're not just a consumer product. They want to also be a consultant for the cleaning industry.
That's interesting. I'm curious to hear how they are going to be charging companies for that, like what that entails. And that's a cool idea.
Yeah, I like this company because they're not one of these speculative companies. This is the right chart that I pulled up, right? The RBGLI.
Yeah.
Yep.
Yeah. I mean, when you look at the market cap, this is a significant size company. They pay a dividend and they're at an all-time high, which means they're, in uncharted territory and they could really continue.
Yeah, the quote I read this morning was, this is what they said. They go, they're going to be the Deloitte of hygiene. Hygiene consulting could be really big. Travel and hospitality have been decimated by the pandemic. So like they need this company more than ever now to get people comfortable to be able to go back into these hotels, because people are doing Airbnb right now, right? They don't trust the hotel staff.
I'm doing it myself. Yeah, I've been Airbnb hopping. Prefer
because you trust that you could do it, right? You trust that like you'll go in and clean it. But like when you're paying for a hotel, you're paying for someone to clean it, right? Mm-hmm. And you're paying for someone to like have that Hilton brand standard on it. And if they can't keep up with that, let's face it, like the employees that are cleaning those rooms, like, they're getting paid probably minimum wage. So you have to have like those standards in place to make sure that people feel comfortable.
I love that, Vaz, for Airbnbs too, because you see corporate housing now is taken over a lot with Airbnb, and you can tell, they need these protocols in place. So they're all over the world on Airbnb and Vrbo. I like where your head's at here.
Good chart too. I feel like if Bob was here, he'd be like, yeah, if you could try and get in at 18, that would be a nice pullback level. But yeah, I like where your head's at. It also seems like a company that people aren't going to really ever be talking about because they just have a
exactly. And I think I haven't bought any yet, but I don't even think I'm going to wait for a dip. I think where it's at now, like even if you lose a buck a share here or there, like this thing's going to go up if it gets some more brand names. And Hilton's huge, right? Like Hilton has a big pull. And then when I saw Delta, I was like, listen, like the airlines need to get back in the air and they have to have some sort of thing in place, right? Like what are they currently doing besides having you have a mask on a plane? They say they're spraying stuff, but like what if on your plane you had a sticker that said this was just disinfected by Lysol? You'd trust it more.
Kind of like a delivery bag not being tampered with. Like you see those sealers now where there's a stamp of approval.
Exactly, right? Like not someone grabbing your French fries, right?
Yeah.
Yeah, 100%.
Vaz, let me shift gears here and bring up, because I don't think I've brought up that to Mike yet, and I know it's one that you and I have talked about a bit. LiveX. First off, tell us what they do, because it's kind of interesting. And
so I'm down on this stock right now. I know you are as well. But it can be a play. It all depends on, again, how everything goes, and that's what everything kind of is. But I thought about it this way, like when you guys were talking about Live Nation being a long-term bullish on Live Nation in the future, where it was at when you were talking about it a couple months ago, I started looking into like, what are people doing now for concerts? I know I'm not, missing them a lot, but at the same time, there's a younger age than we are currently that love concerts like we did when we were kids. So I think that they want to see, live stream concerts. So, and a lot of these artists still need to get paid. Like that's how these artists get paid. They don't get paid from CDs. They get paid from concerts and they get paid from ticket sales. So there's going to be a point where these artists needs to change their little vacation they've had for 4 or 5 months. So a company like LIVX, who's in the space of live streaming concerts, is possibly going to be able to make some moves. Now, they haven't had like that major headliner like a Justin Bieber, but they've done a couple. Like I know the Darius Rucker concert, I think is tonight or tomorrow. They signed a contract with Pitbull, where they're getting, I think, Dan, you said 50% of the profits from those sales. The average sale to watch one of these concerts live online is about $12 to $15, pretty affordable. And then there's some actually VIP packages where you get like encores and special things like you would in a real concert. It's just all thinking about, will this actually move from the levels that it did in March, April, where it's already doubled or tripled, to get to a place where it's like $6 to $10 a share, if not more, in the long run. But it depends, right? Like I also see social distancing concerts that they're doing right now. I know that singer Andrew McMahon had one in California that was 3 days long, and you just sat in your car social distance watching the stage. I don't know how much fun that could actually be, right? So
yeah, and to add a couple points there. So yeah, like you said, they did just solidify the deal with Pitbull, and on top of that, yesterday they just announced that they did a partnership with like one of the smart TV, like Roku type things, where they're going to be on over 100 million TVs now, not just through phones. And in addition to that, they haven't had any analysts cover them in quite some time, but the average analyst rating on this stock for the price target is an average of over 6. And they are actually making money. They're live streaming concerts. People are using them. I think the Pitbull thing is kind of the beginning of a lot of things to come. They also recently just acquired one of the big podcast platforms. I forget the name of it. I'm going to have to look it up. But that just happened a few weeks ago. And they have some big podcasters that they've been bringing in. I know like Daddy Issues is one of them, which is a big podcast out of LA. And it kind of just shows what they're doing as far as what they're trying to do as a company, which is clearly get into audio content.
yeah, I think I'm okay with losing a little now, holding this at least for a year and see where it goes. That's kind of how I'm playing it. I think it's either going to boom or stay where it is, to be honest.
So what do you guys think, like, say, fast forward a year where, say, we get things back to normal when, spring, summer rolls around 2021? Where
that's what I'm questioning, right?
Yeah.
Because the NBA already just announced 3 days ago that they're like planning for a bubble next year as well.
For sure. And Vaz, they have to play that card. But I'm getting at here, say things are back to somewhat normalcy here within a year. Do you see these guys having an actual place on the mantle? Like
even when things are back to normal, it's not like, to me, live streaming is something that's always been on the verge of breaking out. And you can almost almost tie it into virtual, I guess you can call it augmented reality. But to me, this is a similar thing as what you'll see Twitter and Facebook do, where you could pay to technically be at a football game with good seats without actually being at the game. And I think that does cater to a lot of people. I think there's a lot of people who want the experience of feeling like they're live without actually being off their couch.
So my question to you guys is, this may be a takeout target when you think about their model and what these big, tech and social media companies are even doing. You see how much Facebook's invested in video. We see Twitter is trying to roll out a subscription model. Do you see maybe these guys being appealing for a company like that?
I think if they make the right moves, yeah.
Yeah. And they're a legit company. They're based out of Los Angeles. They have a ton of employees. They're definitely a small cap company. They're only worth a few $100 million. I think the big thing that we need to dive into, and Vaz, I know we were talking about it a little before the show even started and before Mike came on, is making sure financially they're okay. And they're not one of these companies that I know they did a stock offering at $4.14 last week. And that's something that a lot of companies have been doing to take advantage of these runs that they've gone on. But we've also seen that happen from companies like DraftKings.
Yeah, I think you want to remember, too, like the world we're in today, and you guys know it being in the business industry, there are a lot of companies that will be in debt for many years before they, possibly break even or make profit, right? And this could be one of those that's just going to take losses until they get big acts like, a Justin Bieber, a Justin Timberlake, all these top hit artists right now, or like people that have been pretty big. The second they land like 2 or 3 of those back to back on a Saturday night upcoming in the summer or September, October, I think it's really going to come into play after this summer. Like people are out now, right? People are still going to beaches. People are doing things. But once like the fall hits, people will probably not be out as much if this keeps spreading at the pace it is.
You're dead on. Psychologically, with the weather turning, it's just going to be a what if factor.
Yeah, it's going to be like, hey, football Sundays and Saturday nights, what am I doing?
You're right. Yeah.
Let's kind of switch gears here and turn to what's going on, because obviously these are 2 circled dates on the calendar that everyone's been talking about here for weeks. I don't really know if it's going to pan out and kind of be as exciting as people think. But between the Fed meeting at 2 p.m. Eastern time today, and then obviously you have the big tech leaders that are all on their Congress hearing, which to me is fluff and nothing. But more importantly, they have their big earnings tomorrow. And I think this morning the market looks like it's going to open up. And what we've had over the last 24 hours are some companies that have reported some really, really strong earnings, and the market's been reacting well to that. And that makes me pretty bullish in the market right now, because I think what we were happening leading up to yesterday is companies were having decent earnings. Well, some of them weren't, and they were selling off just because they've run up so high. And I don't know if that's overdone with now, but I mean, AMD has been a rocket ship. It's incredible because that stock has basically gone from 50 to 72 in about a week. And yesterday they had earnings, and they had their earnings after their stock had already run up an incredible amount. And obviously everything happening with Intel, they're basically handing over business on a silver platter to AMD. And I think there's a lot of people that are switching out of Intel and into AMD. So you got that going on. Boeing also reported this morning it was a miss, but it looks like their stock is up. GE reported this morning, it looks like it was a miss, but their stock is up. And, you know, I think a lot of this is based on guidance. I think a lot of companies are coming out with guidance that's way better than people thought, which is what the market wants to hear.
Like
right
Starbucks and Visa. I mean, when you looked at their earnings, Starbucks obviously was impressive. Visa always impresses with earnings. That's one of those companies you look at, it's hard pressed to be disappointed with them.
And I'm glad you brought up Visa, because they're a really key indicator as to what's really going on as far as the health of the consumer. And, you know, I think, I mean, what do you
do? The stimulus, there's another roll of checks coming here of $1,200. So that goes a long way.
And that's the other thing.
I read a news article today that there's a guy being sued in Miami for getting I guess he got like a stimulus check for all this, and he went and bought a Lamborghini instead of like using it for something right. So people are spending money. And just to answer really quickly before you guys dive in, the difference between earnings today and yesterday and earnings weeks ago is earnings weeks ago, there was probably like 10 companies a day that were major names that were reporting earnings. So people were trying to get out of those quick to go buy the other ones when they made profits off of them right when they, you know, hit their positive earnings. Today, you have 961 companies doing earnings, right? So like people aren't going to run away from those stocks today. They'll stick in because they're like, hey, which other one am I going to jump to? They're all going up if they had decent earnings, you know?
Yeah, it's a great point. And it makes you wonder, like Dan brought up last week, historically, the August rally setup. You wonder if this week sets us up for a nice run till Labor Day.
Yeah, I think we're going to have a huge August. Big August.
Yeah, you know, it's interesting because when you brought up the stimulus package, reading between the lines, when you hear about what they're saying about it, they are far from a deal right now. And I don't know how long it's going to take, but you basically have the Republicans that don't really want to print any money and are trying to agree to $1 trillion. And then you have the Democrats that want $3 trillion. And you have things that they're really far apart on that I don't think either side's going to bend on. So it's going to be interesting to see what happens with that. Let me ask you guys, would you think and just so you know, when I talked about the August rally, I was talking about election seasonality years. It's not an every year thing. It's this market has been kind of following what the elections years do to almost a T, where a week ago I said that what happens in the election years is you got to sell off in July at the end of July. And that's exactly what's been happening. So it's literally been following that. So it'll be interesting to see if it continues. Maybe it will, maybe it won't. But I mean, I'll just ask you guys right now, do you think the market ends this week higher or lower? Vaz?
I mean, these earnings today are going to make or break. I think we'll be up today and down the next 2 days. Not big down, like what we've been experiencing the last couple of days, a little percent here or there, not like a 5-6% dip. But I think going into the third next week, it's just going to run. Ultimately, like you said, I really believe what you've been saying about, I look back at the election years, like you were talking about, and it's dead on. Like this week has been a little worse in other election years, but it's pretty to a T. We only had like one positive day in the last like 3 or 4 overall. So
I think there's also, I know we brought this up a little, the whole notion of the outcome of this election might not be as drastic as other elections with volatility, with the outcome of whether it's Trump or Biden. Mm-hmm. You could tell the street was worried about a Bernie Sanders possibility a few months ago. Now that that's off the table, I think people are coming around to the fact of maybe Biden wouldn't be that bad for the market. So
For sure.
if that's the case, we might not really see much volatility heading into the election.
Yeah, I think you have to think about it like you guys have been in the stock market now for, a while. Like, how did it act while Obama was in office for you guys?
I mean, to be honest, since we've been in the stock market, there's been at least 3 times I can count on my hands where you're fastening your seatbelt for wild rides. And to me, this is one of them. And to me, right now, the market is at a really crucial point in terms of I think we're going to either see it really explode through these levels or have a massive sell-off. Like where it is right now, it's not healthy. There's a lot of indicators right now that are pointing to things not going well. I mean, you don't really want to see gold at an all-time high. Ultimately, the dollar weakening is historically good for assets, but not when there's an overlying theme that there might be a dollar actually collapsing. That's not good for assets. So I think what you might see is almost a relief sell-off on gold just because it's been out of control. And if you look at the RSI indicator, gold is just extremely overbought. And you could say the exact opposite with the dollar, where the dollar is oversold. And I think both are happening for a reason. But at the end of the day, gold's a commodity play. So I don't think we're heading towards a world where the dollar is not going to exist. So I think what will happen is you might see the market have a little bit of a relief rally just based off of gold selling off a little bit and the dollar strengthening a tiny bit. But then I think the opposite could happen. I think the dollar can go to almost, the mid 80 levels and gold could completely soar. And I don't think that will be good for the market.
Yeah. I mean, gold is down pre-market, which is good. And everything else looks green right now. I think when I look at it, there's 2 things that I factor in, and I could be speaking to what I like, but one, I think when sports come back, because it's bound to happen, like they're going to do it no matter what. If players want to sit out, they could sit out, but they're going to go until this thing is driven to the ground. It's like one of the, the major players in the US, at least, that drives complete revenue and also social, like people's minds, right? Like it's a stimulator for people and gambling to the sports themselves. But I also think about, you're looking at an August, like, is there really going to be a sell-off August? People, probably happiest month of the year, right? Like,
let me reply to that real quick about, is there going to really be a sell-off? And the question is, nobody really knows. But what I will tell you, and this is the dangerous part for me, is you got the benefits from the stimulus package, the first one, that are ending this week. They're done now. And there's no way they're going to continue at the rate they've been. They've already came out and said that the amount that they're going to pay on the unemployment and benefits, they are going to go down. They're going to probably go down drastically. How much, I don't really know. So what's going to happen is all the ramifications from this virus on the economy that haven't actually come to fruition because there's been things that have been kind of keeping it up, they're all about to smack us in the face. And I think it's going to start with the consumer losing confidence by not getting as much of a relief program from the government. And if that's the case, which it seems like the market's trying to digest, that's terrible for the market, because that's you can make the argument that's been the one thing keeping this market alive, is the fact that you have this huge unemployment rate, but it's being paired with this big government stimulus package.
Yeah, but you won't see that happen until the election, because think about the math on it, right? Like,
it's already happening this week. It expires. So
no, I mean, you won't see the effect of it because the stimulus checks stop now.
Happen immediately. If you're somebody that's getting a $600 check every week of unemployment in addition to what you're getting, and that now is going down to $200 right now, mentally you're already
for the consumer, like the person that's actually going to buy things, they're not going to buy more things, right? Like they're going to spend less money, but we won't see that as stock investors for those companies for like 2-3 months.
The market, if what you're saying is true and you think that the consumer is going to start to tighten up over the next few days just because they know and they're seeing what's coming out on the media and they're seeing that they're about to get less money, the market looks ahead and they know that, that's not going to get reported right away from the companies, and it's going to take time for us to see that in earnings. But that's my fear on all this. You see how they're almost setting themselves up for a repeat of 2008 with the housing crisis, just in terms of interest rates don't even exist now.
Yeah.
People are pouring into housing. And at the
I
end of the
think there are
day,
tools, though, that weren't in place back in 08 that'll avoid that happening again with that.
Yeah, but the biggest difference is there was a huge level of confidence literally 6 months ago when the unemployment rate was 3% or 2%, or basically everyone had great jobs. And now it's soaring. And the thing that kind of scares me is I think there's a lot of companies that have been using the PPP loan to stay afloat, and they're about to realize that even if they can get more, it's not really worth it. And you're going to finally start to see a lot of these bankruptcies pile in. And the unemployment rate, it's awful. It's not going to get better overnight. It's probably going to get a little worse. And there's a lot of people that are in that category that have been relying on the unemployment payments that they've been getting to make their mortgage payments and to sustain the lifestyles they have. And if that starts to decrease, which it is, they're already saying it, it's a real mess when you think about how many people that really applies to and the trickle down effect. So that's where I think if reality sets in and the government doesn't come out with trillions of dollars and they don't agree to exactly what the Democrats want, which is to basically pay everyone to get through this, the market almost needs that, or else
there will be a pure rebellion if they don't do it. These people
I don't
are
see that. I see that happening, though. I don't see that coming to fruition of there not being some sort of middle ground where at the end of the day, everyone's on the same page with not wanting the economy to collapse.
Exactly.
You know? So,
and based on
possible. Both sides are possible, right?
Yeah, and based on that, I almost think that they might agree to another $3 trillion stimulus package, which is not what the Republicans are saying.
Well, it comes down to where the money's going. That's where that's really the biggest holdup, always.
For sure. But there's also right now the one party wants 1 trill, the other party wants 3 trill, and
Well, think about it. It all plays off to this, right? Elections coming up, right? You think about which side wins off of it. Do they want rebellion, or do they want everyone to be calm going into the election?
Yeah, I mean, they obviously want rebellion. Or it's crazy how it all works. But are there any stocks you guys are
playing itself out right now?
Let's.
I'm not looking at it. I'm just going to see how the day starts. I've been trying to pick, day and swing trades off of how the days are going. I've been in and out of Twitter a bunch the last week, so
Twitter is a strong stock today. The other one that's been insanely strong is Penn. I mean, Penn was one of the few stocks that was in the green yesterday and stayed in the green even when the market shit the bed at the end of the day. And it's opening up again strong.
We talked about the regional casinos, like the strength of the virus being where it is with the big gaming casinos like Vegas having problems. That clearly helps Penn.
Yeah, I wonder if there's something behind the scenes going on there because that stock's been acting really well. I'm glad to be in it. Let's just put it that way. And I think DraftKings had a major overreaction. And
it did because those
stocks are already going to the moon. Eventually, they'll be in the right place to stay. Stay loaded on those. Double down every time.
Yeah, and anytime people are hitting me up being like, "I'm worried about DraftKings," I want to just buy way more. Like that's
the beginning.
Yeah,
and another
like a stock in 10 years that you're going to be like, all right, they're the major player. And if not, they merge.
Another stock that I think's a really interesting stock today specifically is HPQ. I know I talk about that. Yeah, they had a big sell-off yesterday. And I think it was just because of everything happening with Intel and nothing really related to their actual core business. Mm-hmm. So, it was a real big volume sell-off actually. So I see that kind of quickly bouncing back. They also have earnings coming up, and I'm just going to say one more time that the CEO bought stock this quarter. He never has bought stock before. Their valuation's great. I mean,
either this guy is a savant or he's going to be looked back at as a complete schmuck for not selling the Xerox.
I think I'm going with the RBGLY definitely, but I think I'm doubling my position on Facebook today. I know it's pretty high. It's down on the week over week. Reason being is one, Mike, every time you talk about it, I'm all with you. I think Zuckerberg has the hand in this and he's going to be here long term, unstoppable. But the other thing is they've been like under the radar offering every top TikTok like artist out there tons of money to be exclusive on Facebook and bring all their people over.
Wow, that's
He's such a beast. Like that Zuckerberg is so competitive. He just can't help himself.
That's
he said he wants to demolish TikTok for never he's offered to buy them or under the table.
Yeah.
But basically what they're saying is he's just going to all their top 100 artists and saying, here, exclusivity contract, come to us.
Yeah.
Here's $1 million.
That's
TikTok's in trouble too with the China thing. They're going to have some issues.
And Snap's not the play. It's Facebook.
I love hearing that. That is like the most bullish thing I've ever
That's
heard.
what Zuckerberg does. He's ruthless when it comes to any competition.
I mean, how do you beat that when a company has that kind of money and you go to that Charlie girl who's 6?
They call it fifth degree zucking.
I mean, you can't beat that. That's amazing.
You don't beat Facebook. That's why they're Facebook.
Well, Vaz, you were awesome. I think you should fill in again when Bob's not here. I think he's not going to be here on Friday.
Sounds good. Would love it. Enjoyed it with you guys and excited to see what happens today.
Yeah.
Hell yeah.
Take care, guys.